Welcome, everyone. I'm Joanne Poe from CoinDesk. I am the head of multimedia content, so I oversee all the content we do on CoinDesk TV and on our podcast network. And I have the pleasure of introducing this esteemed panel. I'm going to start all the way down there. Andre Portillo is the head of digital assets at BTG Pactual. I hope I did that. Okay. And right next to him, Regelman. He's the CEO of Security Services and Digital at BNY Mellon. Welcome. And Jose Fernandez de Ponte, he heads up blockchain, crypto, and digital currencies at PayPal, my favorite service. And here we are, and right next to me, Kevin Werbach. He's at the Wharton School at the University of Pennsylvania. He's a professor of legal studies and business ethics. He's also the author of The Blockchain and the New Architecture of Trust, among many other publications. So welcome. Thank you, everyone. Let's start with some level setting here. Our panel is on digital trust and in how we define digital trust. So McKinsey defines it as confidence in an organization to protect consumer data, enact effective cybersecurity, offer trustworthy AI-powered products and services, and provide transparency around AI and data usage. Now, we've had giant blowups in the crypto space, hacking attacks, data leaks over the last year. So on a scale of 1 to 10, and I'm going to go down the line, where were we last year, and how would you rate where we are now when it comes to digital trust as defined as how I defined it?
0 to 10, or can I go negative?
So where were we last year, and where are we now?
I would say we were like 5, and now we're probably 4, something like that.
I'll go, we were 3, and now we're still 3.
I don't know how to put in a number, but I think that we've gone from a place last year of trusting everyone blindly to a place where the demand is going to be trust and verify more and more.
Industry's still here, which is something significant. That's a very McKinsey-esque consulting. I mean, there's probably a 2x2 matrix to what you just described.
Right.
Trust is actually a lot simpler. I talk about it's confident vulnerability. So trust is a willingness of someone to take on some risk. Trust is not certainty, and it's a willingness to act. So the fact that users and participants are still in this marketplace, despite all the blowups, that means there's still a measure of trust, but it's really imperfect. People don't quite know yet what they're trusting or have the confidence that things are trustworthy.
Okay, so I want to start with you, Roman. BNY is one of the world's oldest banks and has heartily and embraced digital assets and custody. How does your organization ensure digital trust?
So I'll start maybe with a little bit of a history. So we've been in business for 240 years. Mm-hmm. Alexander Hamilton was the founder. Mm-hmm. So the whole 240 years is about trust. But it's also been about innovation. You know, we invented many industries, many products. We changed the business model. So to us, trust and innovation go together. The trust is not only, I know my assets will be secure today. That's obviously very important. But I trust that you will protect me in the future. You'll protect my assets, you'll protect my business model. So the reason we're embracing digital assets is because we see the digital assets, analog assets, are different types of assets that our clients, and we work mostly with institutional clients, are really embracing for themselves. Everything we do today in a, let's call that, non-digital world, custody, accounting, collateral management, we have to do for digital assets as well. Because ultimately clients want the same level of trust for all the assets. You don't want to say, I trust this portfolio fully and I trust this portfolio somewhat. 99% trust in your retirement savings, not going to be good enough for anybody. You may not be sure that the value will increase, But the fact that something will just simply disappear, that's not acceptable. So our whole platform is about bringing digital and non-digital assets together, traditional assets, and ultimately the trust that will have to come together as well. And I do agree with you, Kevin, that trust is both real and perceived. The real we can all work on. The perceived trust going to take generations, and perceived trust in financial services overall took generations to establish, and it goes up and down. But fundamentally, to summarize the answer to the question, we're really embracing digital assets as we're embracing all the assets across our whole enterprise.
Jose, out of everyone on this panel, you have a very big consumer brand. So what is the responsibility? Do you feel like a greater responsibility because you have such a consumer-facing brand?
We absolutely feel that the responsibility. So PayPal globally has more than 400 million active consumer accounts, and we deal with people's money. So we take that responsibility really, really highly, and that's a business that we have been not for 240 years, I think they're probably for 24 years, but we absolutely care and put a lot of work and effort and regulatory and compliance work into keeping people's monies safe, and that extends to the work we do in crypto. And that is an asset. It's a responsibility, but it's also an asset. I think that a theme that you will hear from me throughout the panel is that when you're in this sector, you need to do the hard, boring things that are important, and that are maybe less fancy and get you less headlines, but you need to do the compliance work. You need to do the operational risk work. You need to do your homework to be in this space, and it pays off. One of the reasons that when we started in the crypto space probably about 4 years ago, our first product to market was a retail product in the PayPal wallet that now is active in PayPal and Venmo and in a few countries outside the US. And the biggest driver of consumers, and the reason that we saw consumer demand for us, was that they wanted to get their crypto from a trusted brand. The majority of our consumers, even today, we are their first crypto experience. So these are users that have heard about crypto, they're intrigued about digital assets, but they don't know what private keys are or public keys. They don't want to deal with a hardware wallet. They are not familiar with many of the native crypto brands in the space, but they know the PayPal brand, and I'm sure that they will know other brands. But that idea, and when you think of trust, maybe you can break that down in trust in the brand, in the technology, in the operations, and in the regulation. All of us who have brands who are recognized by consumers in the marketplace have that responsibility and have that asset that we can bring to our business.
Andre, you gave the lowest score earlier today, so what are the factors there in terms of your low score on digital trust in the space, and or better yet, what are the key challenges you think the industry needs to overcome when it comes to trust?
Yeah, well, with BTG, we're in crypto since 17. So in this 5 years, the last year was probably the most intense that we experienced. And what I'm seeing is that we've been through a lot of, let's say, bad things in traditional finance as well. Okay, but the point that crypto managed to do all the bad things that traditional finance spent 100 years to do, crypto probably did in 1 year. So congratulations to everybody, and that's why I think I gave the lowest score. And when you talk to traditional clients, I mean, it's been a hard work of educating traditional clients. Why you have to have some exposure to this asset class, why you have to pay attention to this new technology, not only talking about the financial industry, but also the impact that it might have in other industries as well. And it's a lot of work that we put together, okay? And then some bad actors come along, and then, it's like, oh, come in, guys, you're not... There's a lot of work that we've been doing that we need to probably do everything again. And that's why I gave the low score. On the other hand, I think that would be probably the best opportunity for the serious established companies to jump in and to bring the right narrative, okay? So I think that's what everybody in this panel is probably doing, and I think it will be crucial for the future of the industry and the business that we are building, right?
Yeah. Kevin, since you wrote the book on this, what are the challenges in establishing trust for companies specifically working in the blockchain and other emerging technologies?
Well, you should all read the book, so yeah, that'd be a lot better for me. But please do. But I'll give you a taste of it. So part of this is we need to understand what we mean by trust. It's a word that gets thrown around a lot. Blockchain changes the nature of trust. It doesn't eliminate trust. And the big challenge in this space is people focus on, well, can you trust the ledger? Can you trust the integrity of the information on the blockchain? And that's what we focus on with the consensus systems and the technology. But that doesn't mean you can trust all the activity on top of it. That doesn't mean if you are dealing with an exchange that has custody over your assets, the fact that the assets are represented on the Bitcoin ledger or some other blockchain has nothing to do with it. So I think the challenge is understanding what the different points are of trust, and even down at the base layer of the ledgers, it doesn't mean there's nothing that's being trusted. It just means the trust is decentralized and distributed, and we need to understand the different points of trust. So I think the problem is there's been a lack of communication, and frankly even a lack of understanding among the industry about what it is that we are asking people to trust. And I think now, with a recognition that that trust needs to be rebuilt after all the scandals and the collapses, I think we're starting to see organizations be a lot more focused on what are we doing and why you should trust it, as opposed to just saying, well, it's blockchain, and that answers the question.
So what are some solutions? Everyone wants to know, okay, this has happened, what now, right? So between all of your expertise and what are some things we can do that can be done?
Yeah, I mean, first of all, I want to just maybe double down on this topic. When we talk about digital trust, it's not a trust in cryptocurrency. Mm-hmm. When ATMs were introduced, people did not trust them. You argue that ATM was a digital device, there was no digital trust. In early days of my career, I was a fintech entrepreneur, and we were building online brokerage. People would ask, like, would I trust a machine to do my trading? I want to call the broker. I mean, now it would be so strange to actually explain to somebody. In fact, most of the people would actually trust much more to trade online than to call somebody. So I think we have an evolution in trust, and we have an evolution in digital trust. So I really don't want to make sure we don't associate digital trust with trust in any particular digital currency.
Very good point.
And there's a whole chain that need to be trusted, right? So it's not just, let's say, the blockchain. There's a whole chain that happens wherever you're doing any type of service. And in your example, you talk about ATMs, but not going that far away, internet banking or even mobile banking. At least in Brazil, people didn't trust that in the beginning. People start to trust when they start to use, they start to interact, and then, okay, this thing works, my money is still there, I can transfer, the money arrives at the final destination, and it's okay. In crypto, I think we need to think in the same way. If we want that this thing has mass adoption, okay, man, it's not like you're going to be hacked every once in a while, and okay, your crypto might be safe, or moving beyond that. When we think of having all financial products and instruments being offered in a tokenized format, the same thing will need to happen. The same, let's say, worries that we need to be taken care of. So, and there's a whole chain in that, Joanne. I mean, it's not just the base blockchain. There's dealing with the consensus and the transaction is, where you're storing your keys, who's taking care of your wallet, okay, what type of wallet this is. The wallet discussion will start to be much more active right now, right? So a lot of pieces to put together.
Yeah, there's a critical distinction between trust and trustworthiness. Trust is what someone feels towards some other actor. And not everything that is trusted is trustworthy. We saw a lot of that over the past year. But also, not everything that is trustworthy is trusted. So what do we need for solutions? We need the industry participants to focus on being trustworthy. What does that mean? Large literature is actually about this concept reduces down to three things: ability, benevolence, and integrity. Ability is, do you have the capability to do what you are representing? And that, depending on what service we're talking about, it says, if you are going to have your assets stored, what can I do to prove to you or to demonstrate that I've got that capability, technically or otherwise, or the resources necessary to do what I'm asserting? Benevolence is, does the thing that you're trying to trust, do you feel like they have your interests at heart? Do you feel like this entity is actually trying to be appropriate in what they're doing with people's data, assets, and so forth? And when you see them buying Lambos and Bahamas real estate and so forth, then you might be skeptical about whether they have their users' interests at heart. So that's about behavior. Time helps with that. And the final one is integrity, which is consistency. Are you trustworthy across everything you're doing? Because people pick up on that. And when they do, then we have the stories like people have talked about where ATMs, credit cards, things like PayPal, you don't necessarily need 200 years. People, when they see things are trustworthy, then they change their behavior. But you really need all those three pieces.
And what I would add to that is we're trying to generate trust in an environment that has imperfect information. And the way you build trust with imperfect information is that you do signaling. You do things that a bad actor would not be able to afford to do for that. What does that mean? It means that you put your money where your mouth is. It means that, in our case, we offer a warranty against unauthorized transfers from your PayPal wallet, meaning that if somebody gets access there and wipes out your crypto, we will cover you up to $50,000, which covers the vast majority of our users. If you don't trust what you're doing, then you wouldn't able to get that commitment. Or you get regulated in a jurisdiction that is strict, and you get into that regulatory space. The other thing, because we cannot, there is something that circulates in the blockchain communities and the crypto communities. There is, hey, you trust the ledger, you trust the consensus protocol, you trust the mechanism. We cannot tell that to the average consumer. What does that mean? That you should get into Etherscan and validate that the transaction that you're getting, you will never get to mainstream adoption if that is what you're asking people to do. And the other thing that I think that all of us as industry players should be extremely vigilant is similarity bias. So the consumers are being educated and confused on something that's saying, oh, this looks like a high-yield savings account. So probably it's a high-yield savings account and the protections apply. This looks like a brokerage account. So it probably is a brokerage account and the protections apply. I think this is very important that those of us who are designing products design them responsibly to highlight what is there and what is not, and that the regulation applies and is enforced in places where consumers will not be confused by something like that looks like something else, but is not that something else.
Great. Roman, what is the correlation between digital trust and business growth?
I think it's critical as clients embrace digital assets. We need to have digital trust. Clearly, digital assets is a frontier, is a growth frontier for all of us. And it's growth opportunity because of the digital assets themselves, but also because of the conversions. In our industry today, you could be a custodian for traditional assets. You don't have to custody digital assets. That's totally normal. 5-10 years from now, I cannot see a custodian who will custody traditional assets and will not be able to custody digital assets. It just simply would be disqualified. And I'll give a parallel. 20 years ago, there were custodians who custodied traditional assets, and there were others who custodied alternative assets. Hedge funds, well, yeah, no, traditional custodians will not work with them. Today, it's impossible because we have a convergence between alternative asset managers and traditional asset managers. So we'll have a convergence between digital assets owners and traditional asset owners, managers, same thing. That all requires trust, because this trust will enable growth. So I really believe that the history is on our side. And of course, 24 years also is a long time, but 240 years is a bit longer. By the way, we don't compete, so I love your business. But one of the reasons you probably trust us is the history of trust. But that will require a change of the frameworks. That will require understanding of digital assets. It will require focus on internet security broadly. and cybersecurity specifically. And that's all going to be embraced by individual companies and by industry as a whole.
Which, going back, again, that's a good example of signaling again. So BNY Mellon has been in business for 240 years. They have not betrayed customer confidence in 240 years. If the best forecast of the future is the past, you would assume that there is a signal in there.
Andre?
Well, just would add, and even if you have more than 200 years of trust, this can vanish pretty quickly if you don't act accordingly. Okay, so it's something that you always going to have to be paying attention to that in this type of business. Okay, and,
no, completely agree, and that's what people need to do. That, and the frameworks evolve and technology evolves.
it's like what your mother used to say to us, probably. Okay, if you do one lie, then well, I cannot believe you anymore. It's the same here, right? So
It's also a question of what the alternatives are in the market. People trust banks in general, but lots of people also hate their banks, and lots of traditional banks have done lots of bad things. And it's partly what's the option people have, what's the alternative. It's partly what happened to some extent where we saw movement towards digital assets. Now in some cases that was to things that were untrustworthy, which is problematic. But you can't assume that something is trusted just based on behavior. You have to look at what's done. And in terms of business growth, you can't have growth to a certain point without trust. But you can have something that grows and then loses sight of what makes the organization trusted.
I have been very fascinated with the topic of AI. And I'm wondering how you guys, what is the role of AI? I mean, ChatGPT is fascinating. It feels and sounds very real, but obviously everything can be good or bad, right? So how does, I just kind of down the line, how are you thinking about AI? And perhaps, is it technology that we're going to need policies in place in order to keep trust going?
You want me to go first?
Sure.
So
You're the lawyer in the group.
That's true. No, so go back to what I said before about what is trustworthiness. The second element is benevolence, which is the thing that you are trusting. They have your interest at heart. An AI is not a human, right? It may be responsible in its behavior. It acts according to certain parameters. But you can't trust that the AI wants to do what is good for you. You've got to trust in the humans that are behind the AI. Those are designing the parameters of the AI, or the regulators or some other entities that are exercising oversight over it. So I think we're seeing a lot of these examples. ChatGPT is a great example where it's wonderful at creating things that look entirely real until in a lot of cases, you poke at it. And it turns out it's really great at lying because it has no idea it's lying. It's just a set of algorithms that are producing a result. So, you can't expect end users to understand that and to differentiate. That's where you need expertise. And again, it's a combination of the developers, tooling to figure out how to assess and improve on the AI algorithms are important. And policy and regulation is going to be a really big piece in setting guardrails and guidance for where these things can be used.
I agree that policy and regulation will have a big impact, and I will not claim by any means to be an expert in AI. But if you think about the algorithm in itself is neutral, and the algorithms that are being deployed on AI these days are not particularly recent. Many of them came a number of years ago, and the driver now is availability of data and computing power. But there are at least 3 places where probably you can intervene to make sure that you generate that trust. The first one is, as Kevin was saying, the humans who are designing the algorithms and the processes. The second one is the data itself that is being used to train the algorithm to begin with. And once that the third one is once that the algorithm is in production, models drift. And they drift because obviously they only learn from the approved cases and not from the non-approved cases. So if you're able to implement and the policy and the regulation goes toward ensuring the right approach on the humans driving the algorithm, but also that the data that is used to train the model is representative and that there are timely updates of those data sets and those models, that will go a relevant way toward the outcome. But yes, regulation and policy will need to be a part of that.
I think this question is not that controversial. I think we're all agreeing. It's about AI and human intelligence, AI is always focused on some specific area. When a computer, be the world champion in chess, computer was amazing, but it could not differentiate between a chessboard and a whiteboard because it wasn't focused on that, as amazing it was in playing chess. So you have much, much broader application of AI, but it's always going to focus on something. So we need to have humans that allow computers to focus on the right things as opposed to focus on the wrong things. And again, the digital trust is going to come to play even more because we're going to have to trust AI. That means trust the computers. It means trust the people behind these computers.
I don't have too much thing to add, Joanne. We are, in the very beginning of this advancement in AI. Probably right now we are seeing the first, products that the retail is really have the capabilities to use and to understand. The data part is something that is very, very important because if you change the data, it doesn't matter the algorithm, the answer will change, right? AI is a box. You put some data, you run some algorithms, and then you have some answers to that. Not sure if regulation is already. I'm not sure if the technology and the applications are mature enough for us to have to be discussing how to regulate that. But I think the problems will start to happen as we have these applications going to the public, right? And regulation happens after we starting to have problems. So that's going to probably happen.
If I could just jump in with one more thing, the point you're making about data is an important one for AI, and this actually brings it back to blockchain. Because the problem is, these models depend on lots and lots of data. So whoever has the most data has the most powerful models, which pushes for the kind of centralization that we've seen in a lot of technology. What is a great way to decentralize ownership of data, to create new economic models around aggregation of data while protecting user control and ownership, to ensure provenance of data so we know where the data is coming from and can track it and have oversight of it? That's blockchain. That's distributed ledger technology. So I think this technology is going to be really important at a technical level, in addition to the policies to addressing some of these concerns.
If I can, Kevin, do you think this way of us as citizens having more power, more control of our data, which was one of the blockchain promises, do you think this thing will happen? How are you vision to, let's say, the near future for that? Because right now it's a little bit more a concept.
Sure.
I don't see any. Well, do you think we're really going to be there sometime?
Yeah, so as with most other things in the blockchain space, there's a tremendous amount of experimentation going on. Most of the experiments will fail. And it won't replace everything. There is value in having trusted intermediaries. But there's problems with having trusted intermediaries, which is you got to trust the intermediary, and then they become this dominant rent extractor as well. So yes, I think there will be cases, but we don't know exactly what the models are going to be. They're not all going to be just, we all own our data and we all get paid something for our data. There's problems with that. But I think we're going to see that in some cases, and we've got to boil down what we're talking about. You can't predict exactly what are going to be the successful implementations, but we're going to experiment, and lots of organizations are starting to build that.
And if because people, defend our industry, right? People like to say bad things about banks, but we have probably 4 or 5 companies that control the vast majority of data in the world, which is crucial for every new technology development that we're going to be seeing in the following years. So it's.
I think that's also, we're focusing on trust as an intent. Trust is also in capabilities. Somebody may have the most amazing intent and just lack the capabilities. I have an electric car with the most amazing cruise control autopilot functionality. You can guess what it is. Drives really well. Last weekend I went skiing, not here in Vermont, and there was a snow truck that went before me. It created a very narrow white strip of snow to the side. So this cruise control autopilot mistook that sort of line of snow for a white lane and basically steered me in the wrong direction. I completely trust the car maker to have the right intent. He just simply failed in the capability. By the way, this is not an investment thesis statement.
Yeah. They need more people with this problem to correct the algorithm.
It was a Nissan Leaf, wasn't it?
No, that's that again. There are three pieces of trustworthiness. One is benevolence, one is ability, which is what you're talking about, and the other is integrity.
I wanted to leave some time for questions from the audience. So, questions. Please, can you stand and just project?
Thanks, guys. Great conversation. It seems like a lot of times it's not really the security or the integrity of the technology that causes issues, but it's users that get scammed, like my mom giving her bank details to some bad actor unintentionally. And in the blockchain space, it's obviously a lot harder to claw that back. But what role do you think big banks and companies will play in that sort of, it's not really a technology problem on the bank's behalf or on the, the exchange's behalf or whoever it might be, but it's on the user. But it still seems like that is a big proponent of the trust. It's like, my mom gave her bank details away, but then Wells Fargo credited those back to her, and you see legislation coming out with people like Zelle that are now being forced to have to, play ball in that sort of relationship. So I'm just curious how you think about that.
I think education is a big thing. We as a society educate kids not to give their wallet, and I mean physical wallet, to a stranger. If a stranger comes to you and say, hey, can I hold your wallet for a few minutes? I think most people understand that probably not something you should do. And yet, many people don't understand if somebody wants to hold your digital wallet. If somebody calls you and they say, hey, your friend asked me to give your money just for me to just keep for a couple hours because, I'm trying to find him. We know that's maybe a scam. But if somebody says, hey, can I borrow your user ID because my user ID is similar to yours or whatever the Instagram scam that goes, every day, that it's not fully educated. So there are many technical answers to this question. There are many regulatory answers to this question. There's just a basic education. And that's what private and public sector both need to embrace.
I agree. If I make a comment on that. So first, that fraud pattern, scams based on what is called social engineering, has been very pervasive lately. Is not at all a crypto-specific thing. I think there's a fraud pattern that you see in other use cases. The more relevant thing, I absolutely agree with Roman, education is a big part to fight that. And it will get mitigated. And something else will pop up. In the war against fraud, there's always a new thing because you're fighting an intelligent adversary. So it's always the good folks and the bad folks are always fighting each other. I think that on that specific one, education is going to... I'm sure that 2 years from now, nobody's going to pick up the phone and have someone say, hey, you really need to do this now and give me the password that I just gave you. And people say, of course, this is a scam. There is a learning curve, and consumers will get educated on that. And then something else will pop up, and we'll mitigate that something else.
I would say don't be so sure that the technical problems are not an issue, especially when we get into DeFi. Blockchain technology is immature. There are hacks, there are bugs in smart contracts, there are new attack vectors. Flash loan, Oracle attacks on DeFi governance platforms. Hundreds of millions of dollars have been lost that way. That's an incomprehensible problem in traditional finance. And we don't yet have the maturity of the solutions, but people are working on it. So, the scams and the fraud, that's a lot of what we saw over the last year. But at the same time, billions were lost for actual technical failures of blockchain systems. So there needs to be work on that as well.
Hello, thank you very much for an amazing panel. Kate, futurist at Kate Goes Tech. So Bitcoin and blockchain in general have been created as an irreversible transaction platform, mainly to save millions and get rid of the third parties. However, very often, as we know, it is leading to people sending money unintentionally or to a good actor, which turns out to be not that good as FTX. And there are many things that lead to scam, pumps and dumps and so on. How do you maybe potentially see the solution for this partially amazing technology, but partially something that does lead to billions lost as well? AI, Web3, anything? Your companies are working on something?
If I, again, there's all levels of trust and confidence that you need to have in each system. So there's the technology layer, as Cam said, that some are there, some are not. But at the end, most of the problems are not exactly related to the technology, although some are. But the point is that there's the whole chain that depends on the product you need to take care of. And again, people need to get educated. The digital world is a different world than the analog world. But these problems, they always existed, right? We just changing the form that people need to pay attention to whatever they're doing. So in the past, you need to take care of your physical wallet for not being stolen on the street. Right now, you need to take care of your keys. So the way that you need to behave changes, but the problems tend to be the same, because most of the problems has nothing to do with technology. It has to be with human interactions and how we organize as a society. Okay, and trust comes to that. I mean, we are organizing in very different levels of trust. I think in the way that this thing evolves and develops as well, new technology starts. Problems starts to happen, companies start to building solutions to solve those problems, people start to get in use, and then things mature. There's no like at this point, okay, now everything is solved and we are ready to go. No, this is a ever-going process. That's
I just want to say I love your phrase that it's a partially amazing technology. I think that's a great phrasing, and that's part of what we're talking about here. Technology is incredible possibilities and benefits, but there's also some downsides for that. And there's, there are various ways you can address the immutability problem you're talking about.
It's basically about technology. It's not about intent.
No, it's right. Right, but you can respond to that problem. For example, you can pass a law saying you can't actually reverse the transaction on the blockchain, but the counterparty, the intermediary, has to send back the money. Or there's various solutions using, multi-sig. There are various technical cryptographic ways you can address those problems. But again, a lot of work needs to be done. I think it's exactly the right idea that we need to appreciate the amazing parts of the technology, but not lose sight of the trade-offs and the challenges that creates.
Probably regulate more to some extent, right?
That's one piece of it, but regulation is also, I'm a lawyer, so I think regulation is also partially amazing. Most people here would say regulation is partially terrible. Okay, and we're saying the same thing, right? The glass is half full and half empty. Regulation does good things and it does bad things, and that's the fight that we need to have.
Hello, my name is Aya from MIT, so thank you so much for the wonderful panel. So at MIT, we discuss a lot about the blockchain as well. And from business side, we discuss these challenges involving the consumer, so how to build a trust and educate them. But when we talk about the B2B, more like institutional business, we see a lot of the potential to implement the blockchain, especially like kind of replace existing old system in especially banking or transaction. For instance, the SWIFT, very legacy technology, could be replaced by that blockchain or smart contract. A lot of the transaction confirmation can be like confirmed as like a smart contract. So I would like to ask maybe Roman, Kevin, Jose, if you could share which area in the more institutional business side, which doesn't involve the consumer retail space, you see the opportunity for the blockchain to be more implemented as like a new technology, more effective technology to replace the old legacy technologies.
I think we're embracing blockchain as technology. We're talking about any technology that could benefit from, renewal. And frankly, it's a core banking system, it's a custody system, it's asset management. Technology is not about any particular product. I think the product's going to get mature, the product's going to become more efficient, the product's going to become more trustworthy as we embrace better technology. So I think there is a different part in the conversation. As we talked about digital trust, we all focused on digital assets and trust in a digital environment. Your question actually has to do with a much more fundamental thing. Can we just simply have a better technology, which will create a more efficient ecosystem? And I think the answer is yes, and the answer is throughout the ecosystem.
Yeah, I think there is a lot of work still in progress around what are the right use cases for a blockchain technology. And if you think about a push to decentralization, things get decentralized when you reduce the cost of contracting between parties. This goes Williamson and Coase and others. So not everything is a good use case for a blockchain. Sometimes you remember a few years back when people were talking about permission blockchains and the purists were saying, hey, this is just a distributed database. So probably yes, but for many problems, a distributed database is what you need. And having decentralized consensus mechanism, et cetera, doesn't help you that much. So one thing that as a sector sometimes we have been guilty of is deploying blockchain as a solution looking for a problem. Is a general purpose technology that can be deployed for some specific use cases. Some of what you're saying, cross-border payments, I think is a very good one. There has been no substantial innovation in cross-border payments in the last 34 years, probably. And there are things that were something that has instant settlement and finality, and it is a good use case for that. For some others, I think in all of our sectors, we will find applications.
Well, OG Poe, thank you for handing back to me. This was a fantastic panel, and I have to add, because it was a dinner here at Davos with Dan Schulman and all of the banks and some of the technology players, I think 5 years ago, that really changed my perspective on trust. And he went through, I feel, data that the banking community wouldn't share, which is, let me tell you how often you're hacked and by whom. And once he discounted hacktivism, we got into organized crime and state activists. And, you know, Kevin, your point on, if you look at the, Mango hack, particularly the Oracle, I think people don't really appreciate that if we look at how venture is funded, organized crime and state-funded actors who are hacking systems in open democratic, countries are innovating as quickly as we are, hopefully within the law, regardless of where regulation goes. And I think that's something to really think about, because most of us who are focused on open systems and collaborative communities really run the risk of not actually having some of the protections in place we need to in order to make this stuff really secure in the future, whether it's for our mothers or for professional counterparties. So I'd like to thank you all. What a fantastic panel. Can we have a round of applause, please?